Hello, good afternoon, everyone. I'm Jonathan from MPIGHome.com. Okay, today is our second sharing on our education week. Okay, so this is our first sharing in the August month. So our Edu month week. So today actually, how we do actually is every week Saturday 3 p.m. we will be sharing a very interesting topic from a very different industry specialist. Okay, so I myself, I'm from real estate agent industries. So as you can see, my website is actually mpighome.com. We have been serving a lot of customers in the past 10 years. So today, actually, I have able to invite one of my friends, okay, an insurance specialist who have been in the industry for more than 10 years. So let me welcome Shane Ng from Prudential. He's the unit manager from Prudential. Let me welcome Shane. Hello, Shane.
Hello, John. Can you hear me? Good afternoon.
Yeah, hi. Good afternoon. Terry, thank you for accepting my invitations to come to these sharings for everyone. Okay, maybe let us share a bit about how we met, how I met Shane, which is something very, very unique. Okay, it's very special because why? Actually, when I bought my first home, and which is in nearby IKEA, Damansara, and this is where I met Shane because I found out eventually I sold my unit to Shane. Okay, and he became a buyer, but then that's how we started to meet each other and know each other. And more how to say, it's a fate actually we know each other because why? Ever since, actually, we're still in contact. Even this, we have been knowing for, let me see, my son has been 11 years old. Yeah, we are knowing about 12, almost 12 years already.
Yes.
Okay,
yes.
so it's a very, very long friendship that we have. And all this while, actually, we've been contact each other. And he's been sharing a very useful info about his industry. And also I've been sharing info about my industry to him. And eventually, we actually have collaboration where Shane actually bought a few units property, and also I do bought some from Shane, also introduce some of the customer to him because this is a very good service that he's been giving. So actually, let's get back to what actually we wanted to share today. Okay, so we are actually talking about this topic where how to protect my greatest asset. Okay, Shane, at this one actually that day you got asked me a little bit about it, and some of the I'm still a bit confused when you ask me this question. What asset? Maybe Shane, can you share a bit about what are you actually going to talk about it, and we can share to our audience here.
Yeah, thank you, John. So first of all, let me start by saying thank you as well, John, for inviting me here. I'm honored. So I've always appreciate our relationship through the years and see how you're doing well. And of course, I hope all our audiences at home now is staying well, safe, and healthy at home. Thanks for tuning in on a Saturday afternoon. Yeah. So back to your question, John, about what is protecting my greatest asset. Yeah. So perhaps I just share a bit. I've been 18 years in Prudential insurance business. Prior to MCO, before MCO, sometimes I ask my good friends and clients, hey, what is your greatest asset? Yeah, I have a very vivid recollection of one couple I met. So when I asked this question, what is your greatest asset? The lady client actually told me, oh, my greatest asset is my eyes, lor. I was stunned. And then the husband actually said, oh, no, I thought your greatest asset is your smile. So we all had a good laugh. So of course, thereafter I elaborated and said, hey, when you meet me, I'm your insurance agent, wealth advisor. Of course, it must be something related to financial, correct? Yeah.
Yes.
So thereafter, I follow up to explain actually what is our greatest asset. Yeah. Currently, as we all know, we are in this COVID situation. What is the most important thing now, or hottest topic, of course, is to get vaccinated. Agree, John?
Yep.
Yeah. So, of course, vaccination will provide us with the physical protection. Yeah. But what about our financial protection? Our financial protection, of course, must come from insurance. Yeah. The fundamental of financial protection is insurance. Yeah, so recently I just read about this LIAM survey. LIAM actually stands for
Okay.
Life Insurance Association Malaysia, which says that as at last year, the average sum covered, that means if a person passed away, the average sum covered or the payout amount is just about 120,000. Yeah, imagine, John, we are the same age,
Okay.
same profile with two young kids at home. If yesterday you and I are out of the picture, how long can 120,000 last?
Yeah. Well,
Yeah. So
120,000. Nowadays, you very tough, lah. Especially in
cor-
the Klang Valley. Especially in the township, really, it's a bit tough. Of course, now MCO, we're not going out. We save more a bit. I think a lot of people also saving a lot. But frankly, it's still not really enough
yeah.
for yeah.
Yeah, exactly. So, of course, ideally, according to statistic and average, they actually recommended 550,000, which is about 5 years annual income of a person earning 100,000 per year lah. Yeah,
Hmm.
so we have a rule of thumb saying that, of course, as a family man, at least we must have 10 times of our annual income plus whatever liabilities. Yeah, I mean, you're in
Yeah.
a property, you would know property should be and could be most people's biggest investment or asset. But of course, if anything happen, it can be a liability. Yeah, correct, John?
Yeah. Yeah. It
Yes,
is.
yes.
Yeah, because it really depends on your own financial management also as well. Yeah.
Yeah, definitely. So the main question or the main topic I wanted to highlight today, if you guys just give me a second, is on this, um, yeah, which is, are you covered? Are you covered sufficiently? Yeah. So you can see the slide, John.
Yeah. You can. This
Okay,
can see.
thank you. Yeah, so in actual fact, from my 18 years experience with the Prudential and insurance business, I've met many people that say, oh no, I've insurance, I already covered and all. But the truth be told, most people actually have their insurance coverage, again, 120,000, some covered. Most of them have certain medical coverage, but they're not being updated or reviewed along the way. Yeah, so why this happened? Because either due to complacency or certain stigma against insurance agent, hard sell, or maybe they
Yeah.
just put it behind them. It's very very common, very common.
It's
Yeah,
very common. This. Yep.
correct. Yeah, so that is some of the common myths lah that we want to discuss
Yes.
about. And my main message to all of us here listening is definitely you have to cover yourself sufficiently. Again, relating to the metaphor, it's just like vaccination. Yeah, you cover yourself physically. Yeah, like for example, our car, it is compulsory to cover it, isn't it?
Yep. Yep.
Yeah. So the question is, the car or the driver is more important?
A
Of
lot
course,
of
the
people
driver,
when
isn't it?
accident like
Uh,
last time when a lot of people when accident first thing look at the car, not look at the people.
Correct.
That's the last time.
There's a joke that the car accident happened. The person actually walk out and look at the front, what has happened. Then suddenly
Yeah.
notice the hand already twisted or hand broken. So they value the car. But of course, joke aside, seriously, of course, the driver is more important than the
Yes.
car, lah, right?
Correct.
So again,
Correct.
backs the question: are we sufficiently covered? Next, of course, your question will be, so how do I determine whether I'm sufficiently covered or not? Yeah, so that, of course, you need advice or service from a competent and trustworthy wealth advisor or insurance advisor lah. Yeah, most people they will have their own already, assuming they are financially affluent. So get back. Please stay in touch with your insurance advisor or agent, and it must always be a two-way communication. Yeah.
So just now you mentioned the sufficient coverage is 10 times of our income. So meaning, let's say my income is, let's say example 100,000 a year. So my coverage will be
John.
so meaning our coverage will be supposed to be 1 million. Can you say that?
Exactly, John. So of course, with that 10 times 1 million, that is protecting your income. Yeah, protecting your income or loss of income if you're no longer around, whether due to death, disable, or illness, right?
Okay.
But that be told, ideally also you must add in liability. So for example,
Alright.
you buy a house of, let's say, 500,000, all right? So 500,000, most of us, we take a certain loan towards it, right? Let's say 400,000. So
Yep.
you must have 1 million, which is to cover your income insurance, plus another 400,000 should anything happen. So the 1 million is for your family and your lifestyle to maintain, right? And then the
Yeah, yeah.
400,000, of course, is to take care of the housing loan, so that, I mean, your family can still stay in the same house and don't need to worry about the installment.
I
Yeah, John?
see. But one question is, what is the, because you are in this industry so long, roughly how much average is, like, let's say in Klang Valley, what's the
Yeah.
coverage that people, so I mean, what's their coverage at the moment in average, roughly for everyone?
Yeah, thanks for
Maybe you
asking,
can share a bit
John.
about that. Yeah.
So, I mean, again, on the average statistic that I just given, according to LIAM, Life Insurance Association Malaysia, so the
Yeah.
average sum covered or paid up if a person pass away is 120,000. Yeah, so ideally, again, average, most people must have at least 5 years or 10 years your income, ideally, yeah, ideally. So if you cannot do it 10 times, at least start with 5 times. Yeah, think about
I
your loved
see.
one and think about yourself, lah, if anything were to happen. Yeah.
Okay. I see. Interesting. So, but I think that then you got mentioned to me before, is it the current market in average, most of the individual, their coverage is not even up to this par, right?
Correct. Yeah. So most individual, of course, from my experience, I speak for most of us from this insurance industry. Most people will definitely know the importance of medical protection or medical insurance, having a medical card. Oh,
Yeah. Now I
John.
think the
So
exposure is more, right?
definitely. First thing they check, and a lot of my friends and clients check is, hey, my medical COVID cover or not? How? They very worried lah. Yes. So I mean, good news, Prudential do cover. And yeah, so that is the first thing most people are worried about, and they have it planned out already. But allow me
Okay.
a minute to just zoom in. Again, tip, most
Yeah.
people, I mean, like, would have who has the medical insurance, if 3 or 4 years and longer one before, most of the medical card actually comes with like a limit of 100 to 200,000 per year limit. Some even 50,000 per year, which we know is not enough, because medical inflates by about 13-14% per year. Yeah.
Yeah.
Thereafter,
True.
there are more comprehensive plans, medical plans that comes with at least 1 million, 2 million per year or unlimited one. So do review your medical cover. Provided healthy, you can have it while still healthy. Yeah.
Yep. You help me to monitor mine.
Yeah, of course. Must remind you, my good friend.
Okay, thanks for all these tips. But I'd like to maybe you can share a bit more to us more about some real life experience on what you have encountered, or something you can share with us, which is valuable. Yep.
Yeah, thanks for asking, John. I mean, being so long in the business, and this will be my lifelong business, the more I'm in this business, I mean, the moment of truth, as we call it, more and more
Yeah.
calls, you'll get emergency calls. Yeah, of course, in this journey of life, I mean, we're all heading towards the same end point, so to speak. So I get more and more
Yep.
calls. Just like 2-3 weeks ago, within these 2-3 weeks, I've gotten two calls, emergency call. One very good friend client passed away due to heart attack at age 45,
Okay.
leaving behind a wife and 2 young kids. And then another
Oh.
one, auntie, not blood related lah. She was admitted to hospital Selayang and passed away due to COVID as well lah. And even the son, only son, couldn't visit her, only can video call. That's how it is lah. Yeah, but
Okay.
I mean, thanks for asking this. One that actually is very personal, but I can share with you is, and our audience here today is my late auntie. I will share this case because my late auntie, about 2 years ago, she's 60-year-old. Yeah, she's very close to me, and thanks to the business, we got close. She's my client. She used to work in a bank all her way, from being a clerk all her way into a GM and VP of a bank. So her income is quite well, so easily 300,000-400,000 per year before she retired. So after retirement, she actually complained to me lah. Oh, Shen, I got this eyesight issue and all that. I couldn't see lah. Maybe you recommend me to go and see some doctor and all, go and check out. So I mean, being a kind nephew and my beloved auntie, I scouted a few ophthalmologists and we went to this one near Columbia, Clam. Dr. Siva, highly recommended, very nice guy. So we went to him, he did the cataract op, and thereafter, as we know, John, the cataract op is a daycare and very simple procedure. Correct.
Correct.
Pretty much everybody gets it lah. So after the op, maybe you can go out straight, or maybe 1 day, 2 days observation.
Yeah, that's what my dad experienced.
Your dad as well,
Yeah,
so
yes.
there we go. Very common. So anyhow, I still remember it was a Tuesday. The procedure was done, and evening time lah. This Dr. Siva actually gave me a call. I just finished my meeting in PJ. So Dr. Siva called me, hey, Shen, please come now. Please come now after your meeting. I said, hey, why? Tell me on the phone. He said, hey, no, please come now. I need to meet you personally lah. So if you're in my shoe, John, you know lah, something, not right lah. So of course, I went down straight away after my meeting, 8:30. I went to Columbia Clan on the second floor. Dr. Siva was seated right outside of my auntie's room. Is the computer and the nurse area lah, as you know. So he was seated in front of the computer. He said, Shen, come in. So I sat beside him. Then I sat beside him. He showed me, hey, Shen, this is your auntie's brain scan. Hey, what's that? What color mass one? You only see all this in the movie, right? When you see the X-ray like that and the thing, you know it's a tumor or something not supposed to be there lah. So I asked, hey, Dr. Siva, what's that? I said, hey, your auntie, I done the cataract op, very, very normal, very smooth surgery. But then she says still cannot see after the following few days and all that, still like that. And then we try to scan. I ordered a scan, and I found out there's this 5 centimeter tumor in her brain. Wow, I was like stunned. It's like the size of a baseball. It's like orange, pretty much.
Oh my God.
So I was stunned. So at that point of time, I actually asked Dr. Siva, so what do we do? He said he's not a specialist, I cannot comment much. And then I told him, hey, I asked him, have you told my auntie or not? He's lying in the room inside. He said, no, waiting for you, ma. I said, very nice of you, in a way, very nice of you. Very courteous. So I told him the strategy. Okay, so later, once we go in, you tell her the story, but you tell her the real situation as it is. But I'm going to sit down, I'll hold her hand, because she might break down, she needs comfort and all that. So we discussed a bit, then we went in the room. So at that point of time, I sat down, hold my auntie's hand. My auntie was like, wait, what happened? Like very serious like that. So Dr. Siva spent about 5-10 minutes explaining the whole situation to her. Cataract successful, but found a brain tumor and all that, very serious auntie. The time after explaining all that 10 minutes, Dr. Siva, and then I was like expecting, what's my auntie's reaction going to be? Holding her hand. You know what she said, John?
No idea.
She actually replied the doctor, wow, like that. So I have to remove the tumor. I have to cut all my hair lah. Is it lose my hair?
So she still can joke at this moment.
Yeah. So that shows, how very candid, very strong lady she is lah. So from there on, I mean, the moment of truth again comes, John. So moving forward, the following 3 to 4 months' time, we actually went for 4 neurosurgeons together. In UM, that's one of the best places to have the neurosurgery done. Facilities there are good, and then went private, Sunway, Beacon Hospital, and Pantai Hospital, and finally she decided to go with Beacon Hospital, and decided to do. Why? Because you see the tumor is so big until it compressed the nerve. She couldn't see, affected her eyesight. If don't do, let it be 6 months, 1 year later, all 4 neurosurgeons say sure affect your quality of life. Maybe you become blind or maybe you become handicapped. Nobody can tell. ticking time bomb lah, in short. Or you must take the risk and do it lah, depending who you want to let do the procedure. So I mean, after done the surgery, internal bleeding, 3 months in the hospital, private home nursing care every day. Guess how much a bill came out to be, John? About 400 over 1,000 medical bill.
Wow.
Yeah, I mean, in that unfortunate event, I mean, at least I have a bit of comfort knowing she's my client, and all those are well taken care of. But the sad part, of course, is the operation was successful, but my auntie didn't survive lah. Yeah, so I still remember during Chinese New Year Chap Gourmet. Thank you. During Chap Gourmet, 2 years ago, I was going to a dinner function when I got a call from my uncle, brother. I U-turned, I went to the hospital, and too late already lah. So that was that, John. So my point is this, John. I mean, relating to today's topic, covering how to protect my greatest asset, I can share I mean, with confidence that she will want me to share her story, and also because during her couple of years before she passed on, she actually took up two new houses as well as investment. Yeah.
Okay.
So combined loan itself is about 2-point-something million. She took up about $500,000 of MRTA MLTA. MRTA she took up. So once upon her demise, $500,000 was paid out and left about almost 2 million of a loan.
Oh, okay.
So that is actually hanging, John.
That's something very, because it's not undercovered, right?
Correct. So I mean, that will actually fall as estate, and the executor will need to take care of that now. But I mean, on retrospect, you see, if you imagine if it happens to a person like you or me, breadwinner with young kids to take care of, and then we buy the houses with the best intention, wanting to invest and whatnot. If we are out of the picture, or even down with cancer, heart attack, no work, no income, but the expenses and installment is still there. Big question mark, isn't it? How will our family continue, and what will happen to the house?
The problem is, if it happen, it is like an unfortunate event happen, and you're under coverage of the loan. Eventually, it will become a big debt for whoever who, like example, if I'm the one who passed away, my wife will be suffering. Let's say I'm buying a 1 million house and I cover only 500,000, and eventually I think my wife will curse me for giving her a 500,000 debt.
Yeah, so that's a cliche in our life insurance. It says that don't go to heaven, but leave your family in hell. Truly so. I mean,
True.
that joke aside. So you see, I just want to highlight the main message here is that get sufficiently covered with proper advice from someone that's competent and trustworthy. That's my main message here, John.
Yeah. So I think the it's very important on the coverage, especially on the MRTA, on the amount. Of course, if let's say some property guru, they're actually saying that for those house under investment, probably you don't need to cover so much. I will say it really depends on everyone's personal preference, because if the house is not rented, then it will be big trouble. Of course, if it's rented, then it's fine. There are still people who are paying for the loan, so they can cover on the loan part. But for their own stay, that's the main problem. Because own stay, you are not renting out, and you will eventually, this is where the massive debt come in if your house is not fully covered. So let's say my loan still 800,000, but my coverage only 500,000. So eventually, you still need to pay 300,000 to the bank. And who's going to pay it? Of course, then let's say I'm the one who passed away, and my wife is going to pay the 300,000 debt to the bank, which is she will dig me out.
Hey,
so
wake up!
It's very important. Come up and pay the debt. So this is something very important, and I remember this when I started to even previously when I started started in real estate, and I not really understand about MLTA at the time. Remember, I asked you, what's the difference
Yes.
between the MRTA, because I'm on real estate. We are not in insurance, so that's why I asked you about this. The difference between the MRTA and MLTA. So I remember very clearly. You give a very good explanation on that. So maybe you share the comparisons and the difference of MRTA and versus the MLTA to maybe our audience on this?
Sure. Thanks for asking, John. Yeah, I mean,
Yeah.
I'm flattered that you remember. I only remember like last time on a piece
Because
of
it's
paper, I
simple.
draw
Your
something.
your your
Simple.
your explanation is very simple, easy to understand, even
Yep.
for me who are not in the industry, in the insurance industry. So it's good for everyone to. I mean, your explanation is simplified enough that everyone can understand, which is good. So I think it's very
Thank you.
beneficial for our audience here. Yeah.
Yeah, so I mean, this is one of the common gap, I would say. Let's say if I'm a consumer, I want to buy a house, whether it's the first time, second time, I face it many times on my clients and friends, right? So as we
Yeah.
buy a house, of course, most of us, we have to borrow a loan usually from the bank, yeah? So there's this, I mean, bank, and then we as a borrower to finance the house purchase, yeah? So taking again the example, let's say the house is 500,000, we borrow 400,000. So of course, if you take yourself in the bank shoe, you want to secure this loan, as in if this borrower something happen, my 400,000 I get back no matter what. Correct, John?
Yeah.
So that's why bank when they provide the purchaser a loan agreement, they call it the bank loan document. You got your SMP, and then the loan document with the bank, right? SMP is between you and the developer. So
Correct.
this bank document usually on top of the package of the loan, they provide, let's say, how much the interest, how long you need to pay back, whether there's lock-in period. Usually at the end, they will want to include this insurance factor as well, again, to secure their loan amount if something happened to this borrower. Yeah. So let's take a look from this perspective of a borrower. If we as borrower, first thing I want to highlight here is that always know your option and your right. Yeah. So I always remind my friends and clients is that if your financial standing is good, let's say you earn well and it's your first loan, you request for a loan quotation from 3 to 4 banks. Yeah. They may be somewhat similar, and then you can actually negotiate with the bank. Let's say some bank and some bank officer, with due respect, they are not familiar with the insurance terms, and they'll just push you the product of MRTA or MLTA of the bank. And most consumer, like many who are not aware, they'll just sign, not knowing they have the option to take up on their own. So here, John, let me just share a simple slide and the comparison between this MRTA and MLTA and what's the difference, yeah? You see my slide, John? All right. So as you can see here, MRTA, Mortgage Reducing Term Assurance, there's good and bad. It actually depends on the person, which one suit their need better. I'll highlight that towards the end. So MRTA, as the name suggests, Mortgage Reducing Term Assurance, through the years, the coverage will actually reduce until it becomes zero. Let's say you borrow a 30 years loan, every year the coverage will reduce lah. If let's say die on the 15th year, the amount will be paid out the loan, yeah, or could be less. It can be adjusted accordingly, yeah. Next is that you need to be aware there's no cash back because it's just a one-off payment, or sometimes they actually infuse into the loan agreement already, yeah. But this is a very important point because I believe, John, like yourself and me, most of our clients, we deal with, M40, T20 clients. So for now, you may want to buy house A, and then you took up MRTA with the bank A. Well, let's say a few years later, you are doing better and you want to buy house B, sell off house A or maintain house A, or then you buy house B. MRTA for house A is not transferable to house B. Yeah, John?
Yep.
And the main intention of MRTA most of the time is to protect the bank loan. Bank themselves want to recover back the loan, as we mentioned just now. Yeah. Okay. So in contrast, as you can see here, that mortgage life term assurance is level coverage. That means, let's say the coverage is 400,000, and throughout the 30 years, it'll be 400,000 maintained yearly, and then there's money back, cash back usually, and it's transferable. Yeah, transferable. Why? Because the nomination of beneficiary, let's say if I myself, I'll nominate my wife. If I'm out of the picture, my wife is the beneficiary, right? So then my wife take over the 400,000 cash, and then she can use it to service the installment of the house. Like you lah, John. I mean, if you have it, and then remember, if yesterday you pass away, your wife won't be cursing you. Then the wife, wow, got cash, can monthly use to service the housing loan. No? All right, John?
Yeah.
So
I think this is something that we want, right, for our family.
Correct. So that was the simple comparison that last time I actually draw out for you as well, John. Yeah, ring a bell?
Yeah. That's why I remember very well. It's just the graph alone is actually quite simple to understand. So it's a very good sharing on this. And I think this is benefit to all our audience here. At least they know they have a choice on it depends on their financial standing. At least they know they have a choice on choosing their what type of coverage that they need. Okay,
yes,
so
correct.
then also it's very important. I think one thing is that in our industry, both of our industries, that we looking for, especially like insurance, we need to look for someone who are trustworthy and competent. So this is something I same like me. I actually I don't really get many different agents for one industry, because I believe it's someone who are good in that industry, and they're long over there and they have their reputation there. It's good for them to help me to protect my own interests. Same like my bankers, like you and my insurance, and also like our industry, real estate, all this. So it's very important to get a trustworthy and a competent insurance advisor. So for whoever in the online now, if let's say you have your own property, this insurance advisor, make sure it's trustworthy and competent. Or else, if let's say you do not have someone to service, actually you can look for Shane as well. And Shane, actually, I wanted to ask you one thing. Is there anything some advice that you wanted to give to the audience?
Yeah, I mean, especially during these times, this past 2 years, all of us in this COVID, I think it actually created the urgency to many people about the importance of coverage. Yeah, I mean, and all of us are cooked up and back at home safely. But I mean, the cases of COVID is on the rise, and people are very concerned about COVID. Of course, that is one very important factor which is in our face now. But never forget, and please remember the things that always happen in our life. Unfortunate event always happen at a bad time, never a good time. Accident,
Really?
diseases like cancer, heart attack, stroke, so common. At our age now, John, 40 to 50, 2 or 3 out of 10 will kena one,
You said 30, 40 nicer.
So yeah, I mean, it's a statistic, so we cannot run away from it. Of course, we can mitigate our risk by eating well, sleeping well, be happy and all that. But if it happen, it happen. Yeah. So, but I think the main message I would like to highlight, if you ask me, there's only one, John. Be sufficiently covered while healthy. Again, I repeat, be sufficiently covered while healthy. Yeah, I'll elaborate a bit because you see, while we are healthy, we can take up insurance. But when we are not healthy, and you try to take out, most of the time, either you get non-preferred rates or exclusion, or even reject. Of course, if you ask anybody in the hospital with critical illness, due respect, hey, do you want more coverage? Do you want more life insurance or critical illness? All of them will say yes. But unfortunately, all insurance company will say no. You may think, hey, why is that? Not fair one. But you have to think from another perspective, because the pool of money is for everyone's benefit. Yeah, the insurance company accept the risk. If it's standard, a person is healthy, then we can enter into the pool. But of course, what happened in the future, nobody knows. And then that is when we benefit, or our beneficiary benefit from the insurance policy. Thanks, John.
Okay. So it's maybe let me do a little bit of summary of what you have just now talked about it. Okay, first of all, I think how to protect your greatest asset. So we actually have two type protection. One is on the physically, which is our health, all these things. Secondly, is actually on our financially. So financially, it can be protected. One of the ways actually through insurance, where actually through insurance actually help to protect our assets. Okay, so your advice on the protection is actually what is the sufficient coverage? It is the 10 times of our annual income, correct? Okay, so lastly, also actually one of the things that the difference of MRTA and MLTA, just now you have explained it. So, so one is the reducing, one is the fixed. Of course, both they have their pro and cons, and main thing is that to let the customer, all of us know that we had a choice on to choose which insurance coverage, depending also on our financial standing. Will that be
definitely
correct to cover the all the points that you have shared?
Oh, very good, John. You
Very
actually
good,
listen very well. Yeah, John, allow me to just add a point or two. So, again, some of the points shared here may be a bit general. Thus, I would strongly urge the audience to reach out to your own, again, competent and trustworthy agent. Yeah, if not, please find somebody you trust, layman, and recommend. Yeah, because at the end of the day, our business and what we do is very personal. Personal meaning, we usually do one-on-one appointment, and we need to find out about the financial standing, spending profile of the person, the family, how many of them, what are their dreams, concerns. Then subsequently only tailor make something. It may not be ideal currently due to affordability, but we take the steps progressively towards that. It could be allocating 5%, 10% of your monthly cash flow into protection, and then move up slowly to at least 10%. That'll be quite ideal for most people. Yeah, so that's number one. And number two, last but not least, again, please have sufficient coverage while healthy. Yeah.
So talking about all this insurance coverage is also actually about this unforeseen, unfortunate event, right? So talking about this, I think lately, of course, because of MCO 3 the third time, and eventually many of the even the entrepreneur or working crowd, they are all suffered. Okay, some they lost a lot. Actually, I heard quite a lot actually losing their job. So actually, allow me to share a bit about some opportunity you can look into, which is in my industry for everyone, which is on the real estate. So maybe let me share a little bit more about me first. All right, then I will share what is the opportunity that we are talking about. Okay, let me share on this. Okay, for those who are not knowing me, actually, my name is Jonathan. Okay, I'm not a foreigner. I'm still a Malaysian. Okay, this is my nickname. Okay, I'm Jonathan Ho. So I'm still a founder for MPIGHome.com. So I welcome you all to visit my website, MPIG Home. So what is this? MPIG Home is actually a Malaysia property investment group. Okay, so I have been more than 10 years experience in real estate. Okay, and actually helping more than 300 over buyer or investor in the past to own their own property or for investments. Okay, so what do we do? Let me see. Okay, so this is my website. You can welcome to visit. So actually include a lot of new property launch and even some news and articles and some advice on how to manage your house for this thing. So you are welcome to visit. Okay, so what service do actually we provide is actually rental and sales service for your property. Okay, we also provide professional property consultant according to your needs, whether for investment or for your own stay or for your rental management. Okay, we also give free loan capability check and also consultation. Don't worry, we actually one-stop consultation center here. So I actually also known a lot of mortgage as well, mortgage specialists. So which can the first round with our talk is actually talking about moratorium and also refinancing. So this is you can ask us for that service as well. So also we have a career, very good platform for real estate industry career. Okay, so for instead of our project coverage, actually more than 100 hours project within Klang Valley. Actually, my agency actually cover is an international agency which we cover all over Malaysia. So any requirement you can just ask from us. I actually have my colleagues to help out. Okay, we have each state we have our own specialists over there. So instead of all the project that we cover, we have many different needs that you probably is one of your preference, such as a low density, freehold, whether convenience or not, whether it's a TOD or not. Okay, it's transit oriented, means that nearby LRT, MRT, all this. Okay, whether is it below market price or 300,000 range of property. Okay, but just to share with you a quick one. Okay, the new project that we actually have coverage now, the one of the latest is actually we have a very low density in the Old Klang Road, which is not even launched yet. It's under pre-launch. Okay, you can welcome to inquire. Okay, and also we have a TOD project with LRT and in a great demand area where they actually have a lot of offices and also hospitals nearby and even park nearby, which is come with a very low entry. Okay, the price is about 280,000, and also we have quite a few actually a 300,000 range project in PJ. So you're welcome to us, and this 300,000 is actually not a studio. Actually, it's a 2 rooms to 3 rooms unit. So you're welcome to ask, inquire from me. Later, I'll share you all the link. Okay. So, and I welcome you to subscribe and to my YouTube channel, which is a Malaysia Property Investment Group, or you can find through MPIG. So this is how it looks like. So actually, I share a lot of sometimes I will share about some informations about the on real estate, and also sometimes I'll share about certain info about the projects and some like so site visit. All these things will be updated in my channel, right? So this is the name, Malaysia Property Investment Group. Okay, so this is our contact. Okay, this for me and also Shane. So you can contact us and ask for more information that you need or certain things that you are not sure. You have a doubt on it, then you can ask us. We are more than welcome, and this is our service to help you all to answer and solve the problems. All right. So this is my sharing, and maybe let you all share see this. Okay, this is actually one of the link for those who actually looking for opportunity to join our real estate industry. And my my company actually we have branches in all over Malaysia. You can inquire more information from me, and actually we have a lot of the benefits for all the agents under us. So we have a lot of privilege. So for more information, you can ask me in person. I will arrange a Zoom meeting with you to let you understand more, because today we are not covering on that. It's actually more about how to protect your greatest asset. So today I think that's about it for today's sharing. And I again, Shane, thanks a lot for accepting my invitation and willing to share your 1 hour time with all our audience. And I appreciate what you have sharing, and it's really useful and for everyone here. And thanks a lot, Shane.
Thank you very much, John. I hope we shed some light and enlighten our audience. And please stay safe and well, everybody. Yeah. Thank you so much.
So, everyone, if let's say you think that this sharing is very useful, you can share it out. Teach this to your friends or your family members to let them understand more about it. All right, it's a free information. For free of charge, no charges. Okay, so that's all I am for today, and thank you very much. And I said have a great day and a great weekend. Bye everyone.
Take care. Bye.
Take care and stay safe at home.
Thank you for watching, and see you on the next episode.